when the market opens at 9:30, before that, I'm already looking at very specific levels, and I've proven that this year by showcasing it in advance in Telegram. And I will quote a buy side and a sell side, and I want to see how price reacts at them. Now, this is the part where you write down how to frame out a narrative. This is Venom's model narrative. Without going into great detail, everybody knows that I'm looking for 17,750 on NASDAQ. Okay. There'll be another opportunity rather to uh, take something off beforehand. I'll mention that when we look at the last slide here, because it's the daily chart. But if we look at the electronic trading hours, anything prior to 9:30, and you can see in the lower right-hand corner, it's showing electronic trading hours. At 9:30, what I like to do is I like to look back and see at the start of 8 o'clock's hour. I want to see where the high is and where the low is inside that previous range. What am I saying by previous range? Denote 8 o'clock in the morning. From 8 o'clock until 9:30, that's a 90-minute window. I want to know where's the high and where's the low inside that range of time. Okay, very, very specific things here. Since we're under the impression that the market is likely to go lower because of the impact and weight of the tariffs that Trump's been implementing, the bias should already be naturally oriented to being bearish. But how can we use that information? Well, you're going to look at it from the lens of having this high inside of 8 o'clock to 9:30. That's your buy side. See how easy that is? It's not ambiguous, is it? It's very, very, very specific. And then we have the low formed inside that 90-minute window. Now, before you get all crazy and start thinking, oh, he's teaching the 90-minute cycles or the 90 minutes, this, that, and the other thing. No, no, no. This is a very specific 90-minute window that sets the tone for how the algorithm in the opening range is going to refer to very specific buy side and sell side liquidity pools. And it does not mean that the market's going to go just to that one and not any higher, or to that low and not go any lower. It just means that these are your first initial frames of reference for looking for the opening range or the trade going into 10 o'clock to 10:30. It's that first hour of trading. That's kind of like really the whole basis of what I've been doing for 2025, using what I've already taught, but focusing on that small little 60-minute window of opportunity. And I've given you so many things to help ferret out very intricate details and precision elements that what the algorithm will do. You've watched me do it day after day, week after week, now month after month. At some point, you're going to have to concede and say, you know what? Either I'm very, very lucky, or there's an algorithm and I have something about it. So, because we're likely to see lower prices, it makes sense for the market to do what? To make its market protraction to the high first. What high? That high right there. So this high is going to have much more significance than that of the low here, meaning that at 9:30, the market's going to gravitate to that high here first. Why? Because anyone that's short, the algorithm is going to unseat them and allow smart money to accumulate their positions after being stopped out. What kind of stop is it going to be? When price trades above this high, it's going to be buy stops, which is extremely convenient for smart money to want to be counterparty to, selling to those buy stops and then anchoring and fortifying their short positions here. Notice this high here and this high here, they're relative equal highs. This punch higher right there, this is where you have to be paying attention to, okay? This candlestick right there, that one right there, that is the venom. This high this high, you have relative equal highs. They're known, they're predetermined. How can I say that? Because I mentioned it in advance before it happened. I mentioned that buy side. That was the first level I called this morning. Then market drives up into it. It leaves. This is the signature, folks. Okay, this is what makes Venom. When this candlestick shoots above both these highs here, that's the raid on the buy side liquidity. The candle is left inside of that pool of liquidity above these highs. But here is what confirms its venom. There has to be an inefficient run higher to it and then an inefficient run away from it. See that? That makes this area right in here fangs. Think of it like a viper or a mamba. Okay. This is a snake coming up and biting and venomizing those individuals that were short that have buy stops there. That little movement there in that candlestick laying and closing, it has to close above these relative equal highs. Once it does that, it's confirmed that it's likely setting up venom. When it breaks down on the next candle here and it closes here, you have an imbalance here, imbalance here. That means it introduced and venomated the buy side. It poisoned them and then quickly left. So these are the two fangs. They're your telltale signs. The way you can trade it is you treat that as a real turtle soup, not some goober on X pretending he authored something. This is one of the highest forms of reversal patterns. Now, it's not turtle soup that was taught in Street Smarts. This is absolutely light years beyond that. No disrespect, Linda and Larry, but this is absolutely 100% night and day, light years beyond a 20-day higher low or a 21-day higher low breakout. This candlestick's closing price is the change in the state of delivery. When price trades up to it here, that's your low risk entry. A high risk entry, where you have to have a great deal of conviction, is when it trades above it, you're entering as it runs up into it. And you've seen me do that many times in executions, not in demo either. So this is Venom. We have the up close candle that's inefficient, and then sell side offered in a singular candle where it's just run up, drop the poison in, and then leave it. Then you have change in state of delivery. So the highest form of this would be sell short above the relative equal highs, because the narrative, it's going up first to take that buy side out and then gravitate towards what level? The level I gave also this morning, 18,830 sell side. Electronic trading hours low, electronic trading hours high, inside that 90-minute window of 8 o'clock to 9:30. Those are very, very specific highs and lows, folks. And if you know where the likely draw is on the weekly chart, it means if you're expecting the market to be predominantly bullish or bearish for the week, then only focus on the buy side in that realm. If you're bullish, you're looking for the sell side in that 90-minute window at 9:30. It's simple. It's simple. So you're going to miss some trades. Let me say that also. Sometimes it won't go to your high or low and it starts running. And what do you do in that? Well, you use the opening range gap, or you use consequent encroachment, or you use the silver bullet. There's so many things. You listen to these goobers out there that say the guys that focus, which they're really talking about me, the guys that focus on just time first instead of price. Well, if you're just following price, you're guessing. You don't know when price is going to start moving, and you're going to lose a whole lot more than someone that's looking for time-oriented price delivery. See, I know what I'm looking for. I know when what I'm looking for it's going to form. If it doesn't form at the time, then I know I'm waiting for the next opportunity. I know where they are. I'm proving it. And it's delicious seeing everyone that just simply will not acknowledge that this is real. The depths and the acrobatics that they go through, they try to deny it. And now they're taking, you know, extreme measures of just trying to smear anything they can just to make people doubt whatever I say. But you can't doubt what I've already proven for months now. Every week. When have I gotten it wrong? When has it not done what I said it was going to do? I'm showing examples. I'm giving examples. Now, Venom is this: run to the buy side in a bearish market inside the 90-minute window of forming your buy side and sell side envelopes, where above that is buy side, below that is sell side. And then when we rally up, we leave the candlestick on a closing basis above the buy side, which needs to happen first when you're bearish. Then it needs to have a candlestick that's inefficient higher as it delivers it, leaves the candle up in there, and then quickly leaves it and runs away. And because this candlestick and this candlestick acts like a fang, they're two fangs. It goes up, introduces the venom, the poison, knocks out those that are short. They can't participate, and then it quickly runs away. That's your signature. Then you wait. You either take an institutional order flow entry drill above this candlestick's high as your entry, or if it can afford you an entry back to the opening price of the last candle, which is the venom order block, that is your change in the state of delivery. You can see it delivers it there, goes up 2 more ticks just to make sure the price is there, and then runs away. Then the market breaks down, and you have another little fair value gap here with first presented fair value gap. So in here, I'm waiting for it to trade up into first presented fair value gap, and then inside of this gap that I will not have highlighted in this presentation, but I'm looking at it when I'm watching price. So you can see my entry will be on this candlestick here inside of this gap. So once that buy side's hit, the market starts to move lower and gravitate towards that low here. What makes that low so special? Remember, it's the lowest low in the 90-minute look back at 9:30. But the market needs to be predisposed to go one direction. If you're trying to use this model when it's in a middle of a trading range and it's had several large range candles up or down, Venom will not appear in that. It's not going to appear in that. The nature or the underlying premise behind this model is it's going to unseat those individuals that would otherwise be profitable. You have to have that in the context of why you would even be looking for this setup. Otherwise, it won't be there. And you're going to see people out there trying to look for these setups, and they're not going to be in there because they don't understand the underlying context of the marketplace. We'll continue and move on into more details. Now, here is the executions I used. This is going to be because I was going to show you this as the trade example for today and not mention or draw any attention to my Venom model. But Venom was the underlying premise as to the levels I gave. Okay, so you can see it's not market replay, but in fact, this is an execution done on demo because number one, I want to remind you that it's okay to do this in higher risk environments. In fact, I'm actually surprised to see my model deliver as well as it did today. I mean, this is learning experience for me. Seeing my tools and things being pressed in these high stress conditions where the market is extremely manipulated and has a great deal of volatility, and to see it delivering still like this is it's fabulous. I love it. So you can see that the entry right here, 18,991. That's inside of that gap right there. And I like the fact that it traded up there and fell short of the new day opening gap low. That's a signature I teach. If it can't touch that, is it weak? Yes, when the market should move lower. And that's why I felt confident when it was trading back down inside that. That's when I entered. Okay, so I do this a lot. And I've done it a lot back then when I was on baby pips, when I would show examples. That's when I was really doing it a lot because I was really uncomfortable. I felt the Lord saying, we had an arrangement here. You, you learned it, you know it, but now you're at that point where you need to start sharing it like you said you would. So I was very reluctant to do that. So I would do a lot of things in the examples I was showcasing back then and just trying to get comfortable doing something that I didn't feel comfortable doing. Because let's be honest, okay? I mean, you could just look at the sentiment of the community on X and everyone everywhere else that sees what we're doing. And the common consensus is this should be illegal. Like, no one should know this, right? And this is what I meant when I said, the inner circle. When you learn these types of things, you're viewing the marketplace through a lens that until I started teaching it, nobody was really thinking about it like this. You can call it whatever you want to call it. You can say it's rebranded this and rebranded that, and that's all lies. That's all lies. So anyway, I use this fair value gap here with the pretense of everything I outlined with the Venom model. The market breaks lower from there, zero drawdown on the entry, and then we have this inefficiency in here, and the market trades up into that. Notice this big candle right here. See that? All the way up to the volume imbalance. See that little separation between the bodies? That open of that candle's higher than that close. So that means you have to incorporate that as well. So this is a buy side imbalance, sell side inefficiency. And if we're bearish and we trade down below it, what does that make it? An inversion fair value gap. And because of that, and we were trading above the opening price. See that? Above the opening price. Power 3. Okay. Not some garbage candle range theory. Okay. Timu version. This is how you're entering with smart money algorithmically. The fact that we traded up above that opening price and inside this inefficiency. Well, let's do this. You can see the gap, inversion fair value gap, and then my entry here. And then it breaks down aggressively. And I highlighted this one. It's a gap as well, but I already had a rectangle over top of what I was showcasing. And it breaks lower, trades back up into, fails to get the consequent encroachment of this inversion fair value gap, which is weakness. And we trade down below the electronic trading hours, which is pre-market hours, sell side liquidity. And there's the limit order getting filled there. And then me doing the manual exit where I did not let my limit order, which was below where I got out at. And it actually went about, I don't know, 10, almost 10 handles, 15 handles more than where my limit order was. And then it turned around and came back up, traded back up into the inversion fair value gap, this larger one. Notice the volume imbalances in here. We're going to scrub over a little bit. And you can see now that's the electronic trading hours. It trades up into there. And that shaded box is this inefficiency, sell side imbalance, buy side inefficiency. It tags the consequent encouragement of that as well. All right, looking at the morning session again with that sell side imbalance, buy side efficiency, you can see it trades up in the consequent encouragement. All that right there is just beautiful, beautiful detail supporting the idea that it's going to move lower. All right, let's move ahead a little bit in the day. At 11:30, I teach that begins the New York lunch period, which is a 2-hour period. So 11:30 Eastern time to 1:30 p.m. Eastern time. That's what's shaded down here. That's when you anticipate the lunch macro. Okay, and what you're doing is, and I've taught this before, you want to look at 10 o'clock. Here's 10 o'clock. And at 10 o'clock, start walking forward. Where's the high at that forms when you're bearish? And it's going to come back and knock out those stops. There it is right there. So at 11:30 here, the market's going to start gravitating towards that high. And where it does, in fact, move higher, it uses the inversion fair value gap, now becoming reclaimed order block, rallies up, trades up into those volume imbalances and clears the buy side here. So anyone that's short on the day is not going to be allowed to take a ride below that low that formed in the morning session. The market breaks lower, trades to the CIBI here, breaks down, fails to get into that CIBI there. That's weakness. And we start using that fair value gap levels with those lines there. And you asked me many times, folks, you asked for this information. What do I have on my notepad? It's all these levels. I have all these levels as they form, and I'm watching what price is doing in proximity to these levels. Okay, and in the afternoon we have here at 1:30, I teach that begins the opening range for the PM session. So 1:30 in the afternoon to 2 o'clock, that is your opening range for PM session. What do you do with that information? Well, I taught that the first presented fair value gap, which is this one right here, if you're bearish, it's going to act as what? Inversion fair value gap. The market trades up into the old low here. So we were aiming for that electronic trading hours low. It trades off of that up into a sell side imbalance, buy side efficiency, or inversion fair value gap rather, and it trades up into that fair value gap there. Look at the body stopping right there, and then breaks below that gap. So if I add that there, you can see the volume imbalance, you have to include that. We trade down below it, and then we wait for time. Where's the macro? 250 to 310. Trades up into it. Look at the bodies respecting that. And the market breaks away. First gap that forms after that, there's your entry. Look at the bodies respecting it. Sell off. And it takes out that morning session low there for your PM session trade. Beautiful delivery. Beautiful, beautiful delivery. And you can get a measurement on the bodies, the high and the low. The lowest closer open, the highest closer open in that range. That's what I'm measuring. And you get that price down here, 18,664 and a half. And ultimately, you can see it does, in fact, trade down to that. And then we have the new day opening gap for today and the low that formed after the restart from 5 p.m. to 6 p.m. break. If you found this insightful tonight, I hope you felt encouraged by watching, everything I've shown so far this year. And thank you all very much for your prayers and well-being wishes for my improved back. It's getting there slowly, but until I talk to you next time, Lord willing, be safe.